Infosys kicked off the earnings season with a shocker of sorts. Fourth quarter profit and sales missed the guidance. Profits were down a little over 2% from the previous quarter, while sales slipped 5%. But what shocked investors was the guidance that Infosys gave for the current year.
Well, that's right. Infosys says that it expects revenues in FY13 to grow at anywhere between 8 to 10%. Remember, that's way lower than the projection that's being made by even the industry body NASSCOM. Not surprisingly then, the stock tanked to over 12% in trade, its biggest single-day loss in nearly over 3 years. The management says growth visibility remains poor in a global environment that it calls uncertain.
SD Shibulal has to take some tough calls very soon to resurrect Infy's stature as a bankable bellwether stock, especially after its fourth quarter and annual results, which rattled investors. While its fourth quarter dollar revenues declined sequentially by 2%, what came as a shocker was its FY13 dollar revenue guidance of 8 to 10%, way below even NASSCOM's industry estimates of 11 to 14%. Infy's special dividend was perhaps the only solace for nervous investors. The management says the poor show in the fourth quarter was due to delays in projects, uncertainty on budgets, and ramp downs in select financial services accounts. The volatility even prompting the company to put salary hikes on hold for now.
We are not getting visibility into the spend. Especially in the financial services segment, we are finding out that clients are doing zero-based budgeting, month-to-month decision making, which is creating uncertainty in and lack of predictability.
While the results have raised concerns over the overall health of the IT sector, most analysts are convinced that the pain is Infosys specific. The spotlight, therefore, is on Shibulal and whether he can take a tough call. Investors are waiting to see if he will decide to end Infy's fixation for pricing and margins and focus on growth instead.
Despite the decline in growth for the fourth quarter and a very low FY13 guidance, Infosys management doesn't feel the need to change the way it looks at business or growth. Will that conviction pay off, or will Infosys continue to pay the price for its caution? Chandra Ranganathan, ET Now, Bangalore.
Okay, let's keep it with Infosys' big disappointment when it comes to its guidance. Let's chat with Chandra, who's joining us live from Bangalore for more. Well, Chandra, more often than not, it really is Infosys that sort of sets the mood when it comes to technology earnings. What's the sense in the market? Has this performance triggered fears of a larger slowdown in the technology pack?
Tanya, the way the IT pack reacted today, it has raised concerns about the overall health of the sector. If beginning of a story that we're going to see playing out in terms of uncertainty and delays in decision making. But a majority of analysts agree that the issues that we saw today were largely Infy specific and not so much sector specific. Also remember, in the light of underperformances that they have been putting out in recent quarters, Infy really has stopped being the benchmark for the entire sector. So no analyst is really taking a call on the sector based on Infy's earnings today. They're really waiting for the TCS and Wipro numbers before they decide that the sector itself is in a sort of bother. But clearly Infy's issues need to be sorted out and very fast. Basically they have to decide if they're going to continue to look at operational excellence at parameters like pricing and margins and keep sacrificing growth in the process. Now that strategy has cost them dearly so far, but will Shibulal really take that tough decision and start looking at growth? That's the big question for investors for now. But though this has triggered initial fears of an overall slowdown in the sector, based on Accenture's and Cognizant's guidance, people are confident that perhaps it's an Infy-specific issue and not so much of a sector-specific issue. Some analysts are confident that perhaps the low guidance is in line with Infy's policy to underguide and overperform. We'll have to wait and see if that optimism plays out. Let's listen into what some of the market experts had to say.
While the guidance right now has been fairly muted, probably we also need to remember that Infosys always believes in under-promising and over-delivering. So there will be a small element of surprise notwithstanding the current disappointment in terms of actual delivery.
We definitely like the space. Now it's really a call of investors whether they want to take a call on Infosys or some other name, but I think as a space, you have to be in that space.